there's been a lot of news out of MSCI recently with the release of the annual market classification review. So news about Qatar, Greece, Morocco, China, A shares. Maybe just kind of set the table for us here with your thoughts on some of these new developments.
So today, when we look at the classification standard, we have three different dimensions. One is what we call as the market structure, whether the companies are there and they are sizable, they have liquidity. We also look at the economic growth and sustainability in the economic growth. We don't want to include countries which have just get into one level of economic growth. We want to make sure that the countries have been sustainable in the economic growth. The third dimension, which is not MSCI made up, is actually coming from the investors, which is what we call the accessibility review and study. And based upon those studies, what we do, we put countries on the watch list and potentially upgrade and downgrades. And that was what Tom was mentioning that we recently announced.
As far as classification in general, our clients have a certain level of expectation as you move through the spectrum from developed to emerging to frontier markets. There's different tracking error, there's different costs, management fees, there's different expectations of moving your money in and out. And if you think about emerging markets throughout time, and even recently, Pakistan has an artificial floor on its market, saps liquidity, gets demoted. In 2008, Russia shut its doors for several days. Egypt, as the citizens there took to the streets, their markets were closed. So there's that expectation. And if you classify something improperly, then we're stuck with an emerging market country as a developed market or a frontier country that belongs as frontier as an emerging market.
Provisional indices are important. I mean, we mentioned tracking at the start. Our clients expect a certain degree of accuracy. They want the beta exposure. Large turnover in developed markets isn't threatening to me as a passive manager. The markets are deep and liquid, and we can move large securities or countries fairly easily. Frankly, in the frontier markets, this is an unknown territory. Right? This is the first time we've had anywhere near the size of migrate into the emerging market universe. So I think the use of provisional indices is essential. And this won't be a single-day trade. It's impossible. This will be a multi-month transaction, certainly from the sell side of the equation.
Looking out 2 to 3 years, what countries do you have on sort of watch list for either migration up the spectrum or down the spectrum? What are the next series of markets or regions that we should be looking at?
Yeah, I had a nice look at the list, and it's tricky. I mean, Korea and Taiwan, when you visit them, are obviously developed feeling markets, but from an implementation point of view, the pre-funding and the investor IDs, it really is a much bigger problem to trade those markets, and it's something that developed market investors don't really want to have to worry about. So I think that's probably the obvious case, and as much as they look and feel like developed markets, and probably their growth profile is becoming more developed as well, they're much more tricky to actually trade. So I would say that they'd be the ones I'd be watching for, but it'd be nice to see them free up the actual investability of them as well.
The interesting thing that I've seen is that although the number of managers, and this is just long-only emerging market equity, it has increased. It hasn't increased anything like what I would imagine. So there are a lot of managers who have gone from being very small to very sizable today. And I heard a figure the other day, which was something like 50% of them are either hard or soft closed. And at least what I cannot see yet is a lot of active managers actually getting in and wanting to build teams, because this is a long tail business. It takes time to build teams, to build a 3-year record and a 5-year record. What some of us have done, and I would include ourselves in this, is we've tried to build strategies with particular characteristics.